QuickBooks Pro Desktop 2021. Foreign currency reversing entries. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our problem 4, multiple currencies practice problem. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. Let's take a look at where we stand at this point by looking at the reports dropdown, company and financial. Take a look at that balance sheet standard, the standard balance sheet. Changing the dates up top in the customized reports section from 01/01/21 to 12/31/21, and then we'll say okay. So we had the scenario here where we made a purchase of equipment and we put the equipment on the books, but we're going to purchase it on account, meaning we had an accounts payable that was on the books down here, and we're going to be paying in foreign currency, in our case, the Australian dollar, 100,000 Australian dollars. That fact that we were going to do that then gave us some risk for the exchange rate for the payable. So we set up then a forward exchange contract, which will result in a receivable, which will be in foreign currency, and then another payable, which will simply be in the dollars. We made adjustments for the foreign currency accounts as of the end of the year. So we had the adjusting entries correct, so we could do our financial reporting at the end of the year. For example, we had the $300 adjusting entry here for the end of the year, and then we had the adjusting entry here for the 1,000 as of the end of the year. That is correct, and that all lines up to what we did in our Excel worksheet for the first half of the year. We entered these adjusting entries. Then we kind of messed things up, or we deviated a little bit than what we did in Excel over here, because then we did further adjusting entries before we closed out the foreign currency accounts of the accounts receivable and accounts payable. We're not going to do that in QuickBooks because we would like it to be as easy and logistically easy for the data input as possible. Meaning, if we go back to the home page, we don't want, we would like to separate the adjusting entry department or the process of the adjusting entries from the normal bookkeeping type of process. In the normal bookkeeping type of process, we would like to just simply be able to enter the bill and then pay the bill, let then the system calculate the proper allocation of the gain or the loss. Problem is that if we have a system or an item that goes over the cutoff period, in this case 12/31, then it will allocate all of the gain or loss to year 2 when we want to have an allocation between year 1 and year 2. So instead of messing up the system of recording these two, we're just going to do an adjusting entry and reversing entry, an adjusting entry as of 12/31. Then we will simply reverse it, and that reversing entry will result in the net of the gain or loss being correct after we enter this payable item. So let's take a look at that. If I go back to the balance sheet then, and we see this for 2022 now, if I bring this up to 2022, which is the year in which this whole thing becomes due, we're left with this receivable here and the payable down here of 1,000, 300, and 1,000. If I double click on that, then you can see the detail. If I go back to year 1, 2021 and 2, we can see it was originally on the books for the 60,900. Then when we made the payment, it took it off the books for the 60,900, but we doubled up part of that by putting the $300 here. So it took the full amount off, but we're left with the 300, which we need to reverse out. We needed to put the 300 in there to make it correct as of 12/31. We want to reverse it as of January 1st, which will be the first day of the next year, which will then take it out as of that point in time, and it'll be correct as of that point in time, and it'll then be 0 after 3/31 when we actually close this thing out, when we receive the receivable. Closing this out, same thing, same scenario down here with the payable. If I double click on it and I go back to 2021 and just take a look at what we had, we put it on the books for the 60,000. We took it off the books for the 60,000 when we paid the bill with the bill payment, but we have this adjusting entry that kind of muddied up the waters that we needed to do to make it correct as of 12/31/21, but which is also kind of messing it up to close the thing out. So what we're going to do is an adjusting entry as of January 1st, 2021. We can also see this on the income statement side of things by going to the reports dropdown, company and financial, profit and loss, P&L, income statement, changing the dates up top from 01/01/21 to 12/31/21. And so there we have the 700. If I double click on that 700, that's going to be from the adjusting entries we put in place for the receivable and payable that were for the foreign currencies. So that's these two adjustments in Excel that we put in place here, right? These two adjustments. Those are correct. We need those in order to record the proper amount in this year. In other words, if I look at the income statement for that year, these two net out, and we have our net of 700 gain or loss, or in this case, a loss on the income statement. So that's correct. But then if I go into year 2, like if I bring this up to 2022, 12/31/22, now I'm left with 900 here. And what it should be, if I net these two out, it should be 200. And so we're left with the 900, which really represents, the whole thing. Or in other words, it represents this and this, the 700 and the 300, which is the 900, right? So it recorded the full amount of the gain and loss for those two foreign currency accounts, receivable and payable, and we need to reverse the amount that was allocated to the prior year, meaning that means because that's the full amount, if I reverse these two items, these two journal entries in that period, then it'll be correct. It'll go to the correct amount, the amount we want it to be, and the amount we want it to be is going to be the 200. We should be allocating in the first year 700 and in the second 200, the way the breakout worked according to the exchange rates. So let's do that. We're going to go back on over and we'll do our adjusting entries to do that then. So let's go back to, let's do it this way. Let's go back to the prior period. I'm going to go 01/01/21 to 12/31/21. And then there's our 700. I'm going to double click on that. That consists of the 1000 journal entry and the 300. I need to reverse both of these as of January. So I'm going to double click on one of them and I'll find that journal entry. This was the journal entry that was made automatically when we did the basically adjusting entry process. We asked QuickBooks to do this adjusting entry according to the current exchange rate. So what I'm going to do now, instead of manually putting this in there, we have this nice little reverse button that I've never really been using much, but it's just going to take this exact journal entry and then do the opposite, which is like reversing it. So I'm going to say reverse, and then it goes to the next day, which is 1/1/22, and it takes the exact reversal. So now we have the exchange gain or loss as a credit, and the payable is the debit. The vendor pulls over perfectly. It's a reverse journal entry 1, gives us a nice memo. So very nice, very nice. So I'm going to say, let's save that. Save it and close it. I think that's exactly what we need. Save it, close it. We're going to do the same thing for the 300 here. So that 300, got to reverse that one. That one needs a reversal because it was inverted. So I'm going to then go, we need to reverse this one. Same thing. I'm just going to hit the reverse button and it's going to debit the exchange gain or loss and credit the receivable. Reverse it. And there you go. On January 1st, 2022, did the exact opposite, did the exact reversal. Let's go ahead and save that one and close it, and then we'll check it out. So save it, close it, checking it out. So then we're going to put this to 2022 on the profit and loss. Let's go to 01/01/22 to 12/31/22. And there's the $200, which is that's what we wanted to be there. The exact thing that we wanted to be there resulted in being there when we're done doing the stuff we were going to do. So if we double click on that, then we have our reversing entries. If I could double click on it. So there we have our reversing entries. So notice the reversing entries happened on the first of the month. And then they net out against these totals that happened, and that brings it down to the correct balance. Now, you might be saying, well, why don't I enter the reversing entries on 3/31, which is the end of the contract? You could do that, and that would make it correct for more of the period, because if I do the reversing entry on January, it's kind of wrong up until we actually make the payment and the bill. But it's what we're doing is a reversing entry, and the goal is for us to be correct periodically, in this case on a yearly basis. So we would like to have all of our reversing entries there the day after we did the adjusting entries, so we know exactly where the reversing and adjusting entries are. Otherwise, we would have to kind of like hunt around for where the reversing entries were, and we don't want to do that. We are sacrificing the fact that we're basically going to be off from the time period 1/1 to 3/31, but we're going to be correct periodically, in this case yearly, when we do those kind of adjustments, the adjusting entries and then the reversing entries. So that nets out to the 200, which is what we want. So now we can see that it matches out. Let's check it out one more time because it's pretty neat. And so we want to look at it, admire it. So 010121 to 123121, we've got the 700 in the first year, which matches what we wanted in Excel. And then in the second year, let's check that out again. 010122 to 123121. Hold on a second. I did that backwards. 010122 to 123122. There's the 200, and that's what we wanted in year 2. It just matches what we did in Excel, which is nice. So then if we go up to the balance sheet, back to the balance sheet, and we have this for 123122, we can see that the receivable is now back down to 0. The payable has disappeared because it's back down to 0. This will be easier to see on the trial balance, so we can kind of drill down on some of those 0 balances. So let's go to the trial balance by going to the reports drop down, accounting and taxes, trial balance, TB, the trusty TB, trial balance 010122 to 123122. And here's what we have. So the checking account, we got the receivable has now gone back down. So there it is. Here's our reversing entry that we put in place, bringing it back down to 0. So that's what we wanted, and that's what happened. So we got what we wanted. So that's good. And then the undeposited funds is 0, and then the payable goes back down to 0. That's the one we were looking at. So here's the reversing entry. Reversed it. It went back down to 0 as it should, and so everything looks good. So at the end of the day, then we have the checking account up top. The machinery is on the books for the price that the original exchange rate that we put it on the books for. So that's after all this is said is done, the original exchange rate is on the books, and then the net of the change with these exchange rates for both the payable related to the purchase as well as the forward contracts are netted out then on the income statement, as we said, netted out with 700 loss in year 1 and 200 net loss in the year 2.